Dividend Investor, bonjour, this is Mike Hiru, founder of Dividend Stocks and passionate investor. I'm here today to help you invest with conviction to enjoy your retirement. Today we're talking about the buying process. A lot of people keeps asking me, Mike, my main investing struggle is I don't know what to buy, when to buy, how to buy stocks, how do you do it? How do you screen across 3, 5, 10,000 investment opportunities every single day? And you know that the single one that you pick is the best one. And that is a very good question. First, you probably know that by now, but I focus on dividend growing stocks all the time. A lot of people throughout the years have spent lots of energies, lots of times to read studies, write studies, pull out like those 10,000 pages to tell us that dividend growth investing doesn't work, right? My first thought was, well, imagine if those guys have put that much energy and time on their own investing process, they would probably beat the market by now, right? But yeah, so the first argument is, well, Mike, why do you bother investing in single stocks when you can pick ETFs? And don't get me wrong, ETFs are very great. It's perfect for a young investor starting to get instant diversification, trying to learn the market. It gives you access to all kinds of strategies, all kinds of sectors like this very, very great product if you're starting. Or if you want to diversify your portfolio in an area that you don't know too much, that also works very well. But as you grow as an investor, you may think, well, now I want to pick my own stock. And each time I personally look at an ETF, one of the first things I look at is what are their top holdings, right? Because those are the companies that will make a difference in their returns. And among their top 10, top 20, I always find companies that doesn't fit my investment process, that doesn't fit my values, or I don't believe in those, and I don't want to keep those companies. So this is the number one reason why I prefer to buy my own stocks. The second thing is a lot of people will tell you, well, Mike, you're not creating any magic or any money with dividend investing. When a company pay you $1, well, that dollar is out of the business, therefore share value dropped by $1. And this is Finance 101. If I can make a parallel, I pay my son $10 each week. So he cleans his room and he cleans the living room and do some chores, right? And the first thing I think when I pay that $10 is first I'm getting ripped off because it's not always well done, right? But most importantly, my net worth just dropped by $10. My son is super happy because his just dropped by $10, but mine has dropped by $10. I haven't created any money in the house. The money was just going from my hand to his hand, and that's it. So when you're receiving dividends, it's exactly the same thing that's happening to your portfolio. So do you think that you would buy shares of Microsoft at this price if instead of having over 100 billions in their cash, in their bank account, they would have 1 billion, right? The company value would drop, that's for sure. The potential will still be there, but the value of having over $100 billion is something. So if tomorrow morning they decide to write a big special dividend checks to all their shareholders, you're going to be happy and not happy at the same time because the stock will drop and yes, you're going to receive the money, but that's about it. So there's no magic, there's no creation. And the main argument behind it is why don't you sell some shares yourself and create your own dividend coming from your portfolio? And that totally makes sense, and I get it, because technically if a company pays a 3% yield, it's pretty much like saying that you're selling 3% of your shares every single year when you receive the payment. However, the main difference and why I focus on dividend growth investing is not about the money, because most of my companies have low yield, like 1%, 1.5%. And a lot of people are telling me, well, you can't sell the dividend guy, and several of your picks shows like very low yield, so that doesn't make sense. Well, this is because I believe that I can use both the yield and sell some shares if I want to generate revenue. And here's come the important part about dividend growth investing. Dividend growth investing is not about receiving money monthly or quarterly. It's about conviction. It's about commitment. Management, when they declare that they're going to pay a dividend and then they declare that they're going to increase it year after year, this is because they invest in confidence in their business. They have confidence in their business model. They think that it's going to go well, it's going to thrive, and they will make a lot of money. If not, they would not commit to such things. So, beating the market is incredibly difficult when you're trying to look at the entire market and the thousands and thousands of companies going in and out and all the news. That creates a lot of noise. You have fluctuations, you have financial analysts telling you it's a buy or it's a sell, and then you get all confused because you read tons of papers and you get stock by paralysis by analysis, right? When you narrow it down to dividend growers, you're just taking aside a lot of bad stocks and some good ones, that's for sure. I'm never going to find the next Amazon or the next Facebook or the next Tesla or Nikola Motors. This is not part of my investment strategy. What I'm going to find is I'm going to find great companies with robust financial background, with solid balance sheet and leaders in their markets. Because when I select companies among dividend growers, I just narrow down my research and I increase my chances of picking good companies, right? This is one of the most important point here about dividend growth investing is about investing with conviction in those businesses. Now, how do you do that? Because it's one thing to say, oh, I'm going to pick up dividend growers. It's easy to say, but it's a lot more complicated than that. So I'm going to leave you with the first 3 metrics I use in my stock filter. Obviously, there's a lot more, but I'm not going to bore you like 30 minutes of your time today. So the first 3 metrics I use is revenue growth over the past 5 years, earnings growth over the past 5 years, and dividend growth over the past 5 years. What I'm looking here is I put that in my stock filter and I'm looking at companies that shows positive numbers for the 3 metrics. That's the first thing that I do. Then, most importantly, is when I look at those companies, I look at the graphs. I want to see revenues going like this, because if you go like this and then it goes up in the end, it's fine, but you don't know exactly what's going on. And each time there's a huge bump or there's a huge drop, you must investigate. You must go back in the quarterly statement and understand why there's a jump in earnings or in revenue and understand what's happening and how it's going to affect the company moving forward, right? Now, dividend growth, well, obviously I'm looking at companies that increase their dividend year after year. The more the better, but I'm not going to discard a company that is showing like 3-4 years of consecutive dividend growth. Some of them are very great. I've picked up Apple at that time. I didn't wait for the 5 years or the 10 years to say, oh, finally Apple is a good stock. But then you need a little bit more digging. You want to make sure that this trend is going to keep happening, but picking up those stocks could be very promising for your portfolio as well. So revenue growth, earning growth, dividend growth, those are the 3 pillars. This is what I call the dividend triangle. This is the first step of my stock research. Obviously, we're not done here, but what I want to tell you is I'm hosting a complete webinar about my investing process. We're going to cover the dividend triangle, other ratios, and then how to formulate your investment thesis, select the right timing to buy your stocks. We're going to answer all those questions in this webinar next week on Thursday, June 18th. It's completely free. You just register. If you cannot make it for the live session, if you register, you will receive a free link for the replay, and the replay goes on for like forever. So basically, come in the link description below, register to the webinar. We're going to talk about at least an hour next week. I'm going to share you all my secrets, how I build my portfolio, and I am successfully investing in dividend growth stocks. And I hope that it will give you more conviction, more confidence, and that you will enjoy your retirement. So until next video, stay invested.